Hello everyone, welcome to the Ichimoku charts.com daily analysis for the SP 500 for Tuesday, December the 8th. Well, a bearish day today, and the market has begun a new first time frame downtrend with a candle with a lower high and a lower low. Previous to this we had an inside day and two outside days, and strong downside price rejection from the top of this zone of resistance, and the market is trading within this large congestion area. As I've said, a new first time frame downtrend, and the bears have taken control of this market in the short-term time frame over the day, and they're showing some commitment. They lost a little bit of commitment late in the day, but still showing fairly strong commitment to taking this market lower. Between the open and the close, there's been some net bearish progress on the day, and it's been fairly intense for the day. A fairly large red-bodied candle, quite a large red-bodied candle compared to most of the days trading around it. It's been probably a week or two before we had such a large red-bodied candle, but obviously this shadow on the bottom of the candle is highlighting this fairly large zone of support in this market, and there's been strong buying coming in as the market traded around this zone from about 1080 all the way up to roughly about 1090 where the market's trading at the moment. So we may expect to find this market trading back up towards this area of resistance where there was strong downside price rejection. Now, the market is trading up above the cloud or the Kumo, and that means that the market has an overall positive bias, and the market is trading up above the Kijun-sen, which means that in that medium-term time frame the market is still bullish, but in the short-term time frame the market is fairly negative. The market is trading below the Tenkan-sen. It's actually oscillating above and below the Tenkan-sen, which highlights the fact that the market is in this trading within this equilibrium area and trying to find some direction, but lacking any direction at the moment. The Tenkan-sen and the Kijun-sen have both turned flat, and especially when the Kijun-sen turns flat, it tends to be an attractor of price action. So there is a possibility that the market will trade down to the bottom of this support of the congestion area and trade down towards the Kijun-sen, which is at 1074. There is a possibility of that happening, so we need to keep an eye on that area. If we have a solid close below there, then we can expect the market to trade to the Kijun-sen. As we know from the way that markets trade, they move from areas of disequilibrium. The disequilibrium is generally trending phases, and they move to equilibrium, which are congestion phases, and that's what the market is in the moment. So we need to be on the lookout for a potential breakout in either direction. Now, if the market does break out to the downside, then obviously we have that Kijun-sen support and potential support here at the cloud or the Kumo. As the market continues trading over the next few days, the amount of support offered by the cloud or the Kumo is going to become fairly thin. So there is a possibility that, or a stronger possibility that the market may break out to the downside if it does approach that area. There is still strong support all the way down through these areas here if the market does trade down below there. If the market trades to the upside here and breaks it to the upside of the congestion area that the market's trading in at the moment, if we pan out, we can see that there is potential resistance at around 1133. So fairly strong resistance to support to the downside, moderate amount of resistance to the upside. So all we can do is watch how the market reacts to the barriers of the congestion area that the market's trading in, and be prepared to take that trade in either direction, although we need to understand that any trade to the downside will be limited by the potential support areas below.